So not a good close for the Indian equity markets after today's close. The index benchmark Nifty loses yet another 100 points and this time manages a close below the psychological 18K mark. Good evening traders. I have managed to create this video relatively early today. It's 4:46 p.m. Indian Standard Time, Wednesday, early evening, 17th of November 2021. So after a lot of drama that we've been going through of late, the index and its fight for the 18K mark, this time yet again, which we had seen a few days back, the index has slipped below 18K and it has closed and stayed below this level. In fact, today's last 75-minute bar was very similar to how it behaved yesterday, throughout selling, and manages to close at the lowest point of the day. Not good, of course. The short-term trend, as we can see from here from the 75-minute time frame, is completely non-directional. It's completely stuck between this 17,650, 750 on the downside and 18,100, 18,150 on the upside. The moving averages, of course, will be clueless in this kind of a trading range because they will keep on crisscrossing each other without any stability. This time, with today's close, it has crossed on the downside. Now, looking back at the daily charts, we are still holding okay into an uptrend, and its previous swing lows are the 650, 750 levels, but momentum has definitely slowed down. A look at the Heiken Ashi, and we can see a full-bodied red candle has started to develop, which kind of confirms that this is some serious selling. The last time this happened, this is some serious selling. There was a lot of volatility and a sharp bounce back. Let's see how serious the index is on the downside this time. Whether we see a retest of 650, 750 or not, whether we fall further down towards 350, 450, or we see a very surprising sharp bounce back above 18K and to a new life high, that only the future holds for us. But what we can do is prepare ourselves better, and I would suggest that drop down your gears and trade lesser number of trades, trade lesser quantity. Risk management is of supreme importance in this kind of an environment. But looking at the close, I think that the index might as well drift further down for a retest of 650, 750 zone. Bank Nifty continues to underperform. In fact, we spoke about the Bank Nifty, and the index is now back to the previous lows from where it bounced back last time. We have a confluence of fib target projections. We have a confluence of erstwhile highs and then lows, and a VWAP also. This is a zone of 38,000, 38,300, but the close and how it has managed suggests that, well, it might break below that 38K mark and inch further down. Possibility is very, very high. If it bounces back, then 38,900 and 39,000 stays as the important short-term resistance. We saw that most of the stocks have beaten down. Most of the stocks are at supports and oversold. So keeping a close look at the Bank Nifty and stocks like ICICI Bank, HDFC Bank will not be a bad idea if you're planning to participate on the long side on the short-term bounce back when it comes. But as of now, a clear-cut drop of momentum. The moving averages have all sloped down, which is not the case with Nifty yet, but the weakness is very, very evident. Amongst the sector, real estate lost the maximum grounds, a little over 1.5%, lower highs and on the verge of creating a lower low on the daily charts. Pharma in a nice downtrend, and I think we should extend this. This is where I think the index is coming down for a retest. Private banks and Bank Nifty we spoke about. On the upside, auto continues to show beautiful strength, and if you take a look at the larger picture, the weekly chart of auto, then it's just inched to a new life high, thanks to the recent momentum from stocks like Maruti, M&M, Tata Motors. Let's take a look at these stocks once. And if I sort it down in terms of gainers amongst the biggies, we have, this is a weekly chart by the way, Maruti has gained close to 10% this week so far. Another day to go, and it's back to its Jan highs. Tata Motors right behind it. We've been talking about this consolidation. We had marked this breakout, and yes, finally the stock has delivered. And then we have a bit of Bosch, Bharat Forge amongst the ancillaries, but M&M's decides to slow down with a beautiful shooting star on the Japanese candlestick charts. Pretty nice. The upper shadow seems to be a little too long, but nevertheless we had a beautiful run up. So auto continues to do good, but the heavyweights, the financials, the markets, the bankings, the private sector banks are the ones which are still in the weak spot. Top stocks are primarily negative, with Reliance, yes, an important stock, 2450, 2475 we had marked, and that's where it has entered. Oversold indeed, no such case of divergences as of now. Drop of contraction, or drop of range or contraction is visible on the ATR. The Heikin-Ashi on the 75-minute time frame is still fairly well-bodied red candlesticks, and suggesting that we can see further weakness from Reliance. 2450, 2475, that's exactly where we are. Can act as a soft landing, but yes, if we draw fibs on the downside, an extension of this sell-off, then of course we might get lower levels. So this is an interesting juncture in the stock, and a very important stock, and that's one which has been contributing to the weakness also alongside the heavy banks. Kotak Bank right there, uptrend consolidating. We had some shallow bounce backs which could not sustain, so holding on to its previous highs and the lows. Let's see whether it weakens or not. The possibility is there that we can get a breakdown from this stock for a short-term dip. Sun Pharma is on the verge of opening up on the downside. Bharti Airtel, a very strong counter. We had marked this level, and it seems it's going to face some support there. Hopeful. HCL Tech, nope, it's gone into a nice downtrend. No sign of bounce back as I thought of, so that's not going to get delivered. So is, I believe, TCS. Both are in a downtrend. ICICI Bank, how many times we've been talking about this, creates a spinning top, oversold, uptrend. This big gap up completely gone now. This gap has been closed. And one more stock I would like to talk about, HDFC Bank. Both of them are at decent levels. In fact, HDFC Bank's level is more than decent. If you take a look at this zone of resistances, acted as beautiful support and is exactly where it is right now. Divergence is not shaping up, which means that it can drift further down and then probably bottom out for a short-term bounce back, reversion to mean towards this average. So I think so, and I sense so, that when the Bank Nifty is finished with its short-term selling and manages to post a decent short-term bounce, it's iBank and HDFC Bank which I feel are the ones which will contribute the most in that short-term bounce back. The ones which held well in today's market, Maruti extends further with 2% gain. ITC, well, interesting. Tata Motors we just spoke about. SBI, after the short-term correction, manages to post a flat close, but not very strong. Infosys is doing far better than its peers, much better, and it gets reflected in the CNX IT index also, though in a complete range bound, but the strength from Infosys is much better. You can look to, if you have not managed to make use of this move, then look to buy on a dip. Larsen is one stock which is clearly, there's no doubt, has slowed down, and any close below today's low, and we have a short-term bounce, correction, towards that 1880, 1875 range for sure. So overall, the market's not looking that great actually, wobbly and a little vulnerable on the downside. Let me quickly scan the, it's open here. With the technical query, the Nifty 200 universe for any kind of prospective counters. Dabur, this is the 75-minute time frame. Let me change it to daily. It's a bearish Harami pattern. It's a beautiful doji on the daily chart. It's an inside bar. Not so good. Stochastics has moved down, so maybe a drop is possible. JSW Steel is also an inside bar. Marico, nothing great, not the best of liquid counters. Page Industries, neither. TVS is consolidating after a huge move. Try never to short such strong counters. And then we have Union Bank, which is also a pretty decent bullish Harami pattern. So I would say Union Bank, Dabur and JSW Steel. Union Bank move above today's high can give you a movement on the upside. Short term again. Dabur and JSW Steel below today's low can lead to some bit of weakness on the downside. Bullish and bearish Harami pattern. Sun TV, this is interesting. I think Sun TV is in the band, so derivatives trader can take note. Dabur we just spoke about. Trend, this is not a good bearish Harami pattern because the size of the candle is significant. That is the body of the candle. Shriram Transport Finance is definitely consolidating. It has created a bearish Harami pattern here. It's got a divergence down here. So a break below today's low can lead to a short-term drop. VPL, okay, nothing great. Tara Consumer, no, because this is not a good bullish Harami pattern. It does not have a downtrend. Union Bank we have spoken about. M&M, the range of today's bar is significantly away from yesterday, so we can pass this. Page India. Page India looks good as a standalone Harami pattern, but it's very strong trend. Not a very liquid counter either, so I wouldn't suggest to trade these. These are classical long only portfolio counters. To wait for a correction to buy into them. Amongst the breakout, TVS Motor above today's high can give you a breakout because it has the support of the underlying strong trend behind it. Amongst the others, as I click through them, I am essentially looking at drop of volumes and drop of range. Bosch, not bad. Above today's high, 18,955, expensive, high priced counter. Nalco is very, very frustrating, completely stuck in a range. And Gujarat Gas, Concor, Cummins, no. Marico, we just spoke about. JSW Steel may open up on the downside if it breaks the lows. And amongst the others which have dropped in range and volume, we have Godrej Consumers, which is on the verge of creating it looks like it is creating a divergence, not yet though, but TVS Motor I think can be a breakout candidate above today's high, purely based on the strength of the underlying trend if the market supports, or else it's not a very good idea to go for long positions in this kind of a market environment. Oracle long, we did not find any convincing setup. Tata Consumer, no, because the length of yesterday's bar was significantly long. Amongst the shorts, these are intraday only. Oracle is a purely intraday strategy. Syngene is one that you can look at. Marico, Syngene on the downside, that is. AB Capital, no. Nestle, yes. Prospective. So Nestle and Syngene are the two stocks for a prospective short counter. But having said this, as you see that the number of possibilities have dried up, the quality of the stocks are also not that great, and that's the kind of markets we are in right now. Wait and watch if 650, 750 comes and whether it sustains or not. If it comes and if you're net short at this juncture, you would do good to protect your open profits by trailing stop losses. Don't try to short the market at 650, 750. That would be an oversold condition and ripe for a bounce. If I'm not mistaken, I think Friday is a market holiday. I'll recheck that tomorrow. But we have one more day. If that's true, one more day left in this week's trading. That's tomorrow. And I think I would reiterate it again, that more focus should go now on risk management rather than chasing trading ideas. All right. Take care of yourselves, everyone. Trade well, trade wise.